Nikola is getting quite dependent on California's incentives these days, so is it a red flag for investors or is there nothing to worry about? Keep watching for the next 10 minutes as we analyze the entire situation. But before we do that, subscribe to our channel $1 World for regular NKLA Stock updates. Nikola Corp finds itself at a critical juncture with its ability to overcome numerous challenges being tested as it shoulders the substantial $61.8 million cost of repairing its fire-prone battery electric trucks. However, the company sees a glimmer of hope in California's robust incentives for electric trucks, which may offer a lifeline as it navigates its latest peril. Nikola CEO Steve Gursky acknowledged the favorable environment in California for the transition to zero-emissions trucking during the company's third-quarter earnings call. He noted that California is at the forefront of technology, offering both government incentives and regulations to encourage the adoption of electric trucks. However, the question looming over Nikola is whether these incentives will be sufficient to generate the revenue needed to keep the company afloat. The decision to focus on Southern California makes strategic sense, as drayage trucks operating in the state's ports are required to have zero tailpipe emissions certification starting in January. Battery electric trucks align well with this requirement, particularly for the typical port-to-inland empire round trip, which spans roughly 200 miles. While the shift towards the California market appears promising, there are skeptics who question whether it's substantial enough to support Nikola's operations. One commenter on the Seeking Alpha investor site, Noah Cox, expressed doubt about Nikola's ability to overcome significant structural hurdles in its journey to establish itself as a viable electric vehicle and hydrogen fuel cell truck manufacturer. The total addressable market for zero-emission drayage truck replacements in California stands at approximately 30,000 trucks. It is widely anticipated that battery electric vehicles, or BEVs, will dominate the transition required by 2035. Steve Gursky remains optimistic, stating, "We believe there will be a large appetite for our trucks in the California market beginning in 2024, when the Advanced Clean Fleets Rule goes into effect. However, time is not on Nikola's side as Class 8 BEV sales are sluggish, and safety recalls from companies like Nikola, Volvo Truck, and Daimler Truck North America hinder the adoption of electric vehicles." In California, the Hybrid and Zero-Emission Bus and Truck Voucher Program, or HVIP, has allocated hundreds of millions of dollars for dealers to apply to fleet purchases and leases of emission-free vehicles. For Class 8 hydrogen truck, these incentives could surpass $500,000 each for fleets with fewer than 20 trucks, with a base HVIP fuel cell incentive of $240,000. As of Monday, HVIP had $32 million remaining for small fleet vouchers this year, starting in 2025. Only small fleets with 10 or fewer trucks will qualify for financial aid. Nikola stands out as a significant player in this program, accounting for 96% of the fuel cell vouchers and 50% of battery electric vouchers issued as of October 27th. The fuel cell incentive, when applied to a $750,000 truck, is stackable with a Federal Inflation Reduction Act bonus of $40,000. This combination may persuade fleets that prioritize sustainable freight transport or respond to pressure from their shipper customers to adopt zero-carbon alternatives to diesel. Nikola's initial focus was on securing large fleet customers. In a significant development, Anheuser-Busch placed an order for up to 800 fuel cell trucks in May 2018, 5 years before production commenced in July. The status of that order remains uncertain, but third-party shipper Biaggi Brothers expects to receive 15 fuel cell electric vehicles or FCEVs this quarter to operate for the beverage maker. Nikola projects building 30 to 50 fuel cell trucks by December. In line with California's shifting HVIP target, Nikola has adjusted its strategy to target smaller fleets. Gursky elaborated on this shift, stating, "To make the Nikola business model work initially, we need to be highly geographically focused and build network density. We have Nikola sales team members supplementing dealer sales teams to find every opportunity to sell our trucks, to educate customers on how it works. Selling new technology to a long-established industry is not easy. We haven't tested how much people value being at the front end, but we know they're out there." One challenge for Nikola is convincing customers to pay more. As early fuel cell customers received preferential pricing, a few other states, most notably New York and New Jersey, as well as Canada, also offer substantial incentives for fuel cell trucks. After Southern California, Northern California emerges as the next focal point in Nikola's market expansion strategy. In summary, Nikola Corp faces a pivotal moment in its quest for survival. While California incentives for electric trucks present a potential lifeline, there are doubts about whether they can generate sufficient revenue to keep the company afloat. With its focus on smaller fleets and the promise of government incentives, Nikola is striving to overcome its financial challenges and establish itself as a prominent player in the electric truck market. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. Let's talk about the Nikola stock. As of November 7th, 2023, Nikola Corporation, or NKLA on the Nasdaq, is trading at $1.09 per share, with a market capitalization of $1.12 billion. The stock has seen a trading volume of 69.89 million shares, with a daily high of $1.21 and a low of $1.0750. Over the past 52 weeks, the stock has reached a high of $3.71 and a low of $0.5210. The opening price for the day was $1.18, and it closed at $1.09. Nikola's stock has faced substantial pressure in recent months, attributed to various factors. This includes a recall of all battery-powered electric trucks due to fire concerns, the ongoing global economic slowdown, rising interest rates, and increased competition from other electric vehicle manufacturers. However, in recent weeks, Nikola's stock has shown signs of a rebound. Several factors likely contribute to this recovery, such as the company's announcement of 277 non-binding orders for its hydrogen fuel cell trucks, progressing in developing its hydrogen fueling infrastructure, and an overall improvement in market sentiment. Looking ahead, Nikola represents a high-risk, high-reward investment opportunity. The company possesses significant potential but remains in the early stages of development. Challenges lie ahead, including the need to successfully execute product development and commercialization plans, secure additional capital, and compete effectively in a crowded electric vehicle market. Nonetheless, Nikola boasts strengths such as innovative technology, robust partnerships with industry leaders, and a substantial and growing order book. The future outlook for Nikola is characterized by uncertainty, making it imperative for investors to carefully assess their risk tolerance before considering an investment in NKLA Stock. While the company faces formidable obstacles, its innovative approach to electric vehicle technology and strategic partnerships position it as a potential player in the electric vehicle market, with the capacity for growth and impact in the long term. Coming back to the news, hydrogen fuel cells hold significant promise as an alternative energy source for the transportation industry. Toyota's successful pilot program involving 10 retrofitted Kenworth trucks in the LA port last year is a testament to this potential. Toyota is taking concrete steps by manufacturing fuel cell stacks in Kentucky, which will be available through PACCAR Inc. brands Kenworth and Peterbilt in 2025. Peterbilt's general manager Jason Skoog views hydrogen fuel cells as an attractive option for customers seeking innovation, acknowledging that the initial adoption will be low volume, akin to the early stages of electric vehicles or EVs. The price point for these vehicles is expected to be notably higher, but the surprising level of interest, as indicated by customer deposits, suggests a growing curiosity about this technology. Nikola has garnered attention with its 277 non-binding fuel cell truck orders, of which approximately 20 have transitioned into actual purchases. According to CFO Stacy Pasterek, Nikola will only see revenue flow in once these fuel cell trucks prove their capabilities in pilot demonstrations, a process that can take a couple of months depending on fleet size. Thus far, customer demonstrations have covered over 6,000 miles, boasting an impressive 98% uptime. However, Nikola's broader vision of establishing a hydrogen infrastructure network through partnerships has faced challenges due to limited cash reserves, which stood at $362.9 million as of September 30th. This funding is primarily allocated to truck assembly and covering recall costs. To overcome these financial constraints, Nikola recognizes the necessity of collaborating with partners who can provide the capital needed to execute these infrastructure projects. Nikola initially embarked on mobile hydrogen distribution but has encountered lower demand than expected. Consequently, the company has reduced the number of hydrogen trailers from 9 to an undisclosed figure. Additionally, Nikola sold its interest in a hydrogen production hub in Buckeye, Arizona, to Fortescue Metals Group for $24 million in August. The hydrogen output from this project would have been sufficient to meet customer needs once construction was completed. In the interim, Nikola has secured access to hydrogen from other partners, ensuring a supply into early 2024. One of these partners is Biotech, a player in hydrogen transport and storage, which is producing hydrogen at its Biogas hydrogen hub in Wentzville, Missouri. Furthermore, infrastructure provider Volterra is collaborating with Nikola to establish 8 Hyla-branded fuel stations, with a commitment to deliver up to 50 such stations. These developments represent crucial steps toward Nikola's ambition of establishing a comprehensive hydrogen infrastructure network, aligning with the company's vision for a sustainable transportation future. Remember that this is not financial advice, and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think this stock will make you rich or not in the comments section. Hit like and subscribe to our channel, $1 World, for more such penny stock videos, and we will see you in the next one.